Afternoon, everyone. It's Chris from Soul Society R as well as Axel. You can find us on X, the websites, Instagram, YouTube, as well as Discord. You can DM me on Discord or on X so I can assist you. Subscribe to the channel. It's the weekly free video for the overall market and what's going to happen in the following week. We're not a broker dealer. Past performance doesn't give us any indication of our future results. Let's go to the first slide that I have up here. And what I wanted to show is actually the electronically traded fund, which is part of the Invesco or the NASDAQ 100, the QQQ. It's the ETF for Invesco. It shows you the overall range from January 2024 till May 17th high, while in February we made a high and a low. You can see the prior year range from low to high. We hit this year last year. We looked above and we failed in February, March, fell down all the way to back here in April, and we reversed back on April 9th and never looked back. We created an island here. This is a gap. We had another gap here, which is 100% filled. And we have another gap here, which is between this and this on a gap up continuation. As well, on Friday, after the market closed, Bloomberg had announced basically degrading the S&P 500 in the United States, grading from AAA to probably AA, and caused a reaction in the market at the close to fall further down in the S&P as well as the NASDAQ. Let's see what Monday brings to the market. Actually, Pro Kicker, which is David in my group, sent me a text and said, "Did you see what the news happened after the close?" So now I'm showing you here the Fortune 500 company, the levels, the high and low from the January low of 2024 till the December high of 2024. Then I showed here the highs in March, then we fell down and we had the April lows. We missed that linear regression uptrend. That yellow channel and this one here is coming from October 2023, the orange one, and the yellow one is coming from March 23rd of 2023 lows to here. We missed it by a hair and bounced back up. We got these three islands. This one was filled, but we got two islands. I left that one blank here. I kept it dark, and I showed the highs and lows for the year of 2024 and the January highs of 2025 and the lows of April. Here we had a 21.31% decline in the market, and we reversed back to gain most of it back to the 80% rule. You can see the highs and lows where we are in this July high for 2024, as well as the September lows and highs and the November lows. We came back to this area, we consolidated in a range bound, and we had this professional gap up. Let's see what Monday brings. We are away from the 18 simple moving or the 116 SMA in an uptrend. You can draw basically a downtrend channel that we broke out of, but I'm paying attention to the 116 simple moving average, which is around the 5807. I should say, yeah, the 5807 in the S&P 500. Let's see what the market offers us on Monday, and pay attention to the RSI. When we were grinding up here, you can see there was divergence having lower highs in the RSI. When we had this lows in April, we had a sharp reversal straight up. I would draw an uptrend channel here from this point to this point to this point. You can see the RSI, I use it between 80 and 20. I do have a 38% and a 61, like a Fibonacci, and the 50 is the midpoint of it. So you can do that the same way here. Support, resistance in this area, or resistance and support, and the midpoint would be here. Let's see if we come back, retrace a little bit before continuation. So I am paying attention to the RSI in the overall market. Remember, we trade what we see, not what we think. And that's the most important thing in trading, not to be biased. Most important, you can check us out at Soul Society R. Get in contact with us at either number. Give us your commentary and smash the like button if this was helpful for you. Let's go to the first slide, and I put here the S&P like I showed you here. But what I wanted to do is go over the S&P, the NASDAQ, and gold, and the sectors of the NASDAQ 100, which is the Mega 7 or the Fantastic 7. And I would include Netflix in it. I have included in the NASDAQ 100 part of the Mega 7. You can see here I have NASDAQ 100. I've included Apple, Amazon, Alphabet A and B, Facebook, which is Meta, Microsoft, Netflix, nvda, and Tesla. Netflix, I included myself in there to become part of the 8 instead of part of 7. And I will show you how they look like on the charts on the daily. Let's go to the orange chart. You can see I included all these together. I put a plus sign on the platform to show you where these levels. I'm going to take the weekly retracement fibs out of here, remove the drawing. I wanted to show this range here from the prior week, but that is okay. We're going to remove that one as well. What I want to do is take that. This was the March high. This was the low in April. And if you take a look at the highs and lows in April, if I'm going to extend this area, let's go here. Go get the extensions. We're going to use the measured move just to simplify the numbers. This was the April high. This is the April low. And we can see that we retraced 150% of that move back up. The most important thing is to understand the levels edit the property. I'm going to show you the extension from 0 to minus 100, 0 to 100, 100 to 200% retracement. And what I want to do is you can do them these kind of thicknesses so you understand the differences in them. I'm going to make them baby blue so you understand these levels in relationship to the overall market and where we are on that mega 8 or the Fantastic 8 in that profile. We ran quite a bit in the tech sector on these gaps. If I zoom in here, I wanted to show you that there was a gap here. Then we had this island. You can see there was a little gap in this area. We had this push up on the report breaking that 3,344.95, the combination of those adding them together and that breakup. But on Friday, we sold off right at the close. I am paying attention to that 150 in case there's not going to be continuation and the 5 simple moving average does not make it allow us from the 5 to the 18. We are far away from it. We are in an uptrend coming back 50% of that range. What I want to do is show you where that 50% range is. You can grab a line and just consolidate it like a pitchfork, and this is the area that you want to pay attention to in the combination of those instruments. Let's go right now to the NASDAQ 100. And what I want to do is use the micro NQ. This is the daily chart on the micro NASDAQ 100. You can see the retracements from the April high. This was what? This was the March, I believe. This is the April high. This is the low. And this is the breakout in May. Basically, this is the high and low. We broke up. We got to the 138. We finding consolidation. If we come back to the backside of this channel, very important in the 116 SMA in this area where there was a prior week consolidation to find support at the 18, where the 18 will catch up that way. So let's break it down a little further down. And what I want to do, go to an intraday. We're going to do 20 days. And in 20 days, I want to use 6 hours or 4 hours. It doesn't matter which way. It's going to show you the overnight price action on a weekly basis. So we can see that we were consolidating here for a week. We pushed up, consolidated for another week and a half. We had this little gap in here. You can see between the Sunday and the Friday, this area was basically the highs and lows for the week. So I want to go get a measured move. And this measured move will give me basically a better idea where I am in relationship to the overall market. I'll edit the property and I'll make it baby blue for the weekly. So you can see these levels, usually the extensions coming back to this area are buyable and the extensions to the top are usually sellable. But on Friday we sold off. Let's see what the announcement is on downgrading the US in the S&P 500. We'll pay attention to it. And I want to go to the style, what we call monkey bars or market profile. Usually market profiles are done on daily, weekly, monthly. This is just a 3-day range on the NASDAQ 100. If I go to a 10-day range, I want to put this in a 10-day range just to show the overall range in the market. We can see there was consolidation. We looked up. This is a virgin control point. The point of control is in basically in red. The time spent is basically in green. The time spent is in 24 hours, showing you the breakout, and this was the high, and this is the high, this is the low on the week. When we pushed up, we got that professional gap in this area. I would pay attention to it. We pulled up, the time spent was higher, but in the following day on Tuesday, we had the time spent lower. The sentiment was lower, but we grinded higher. We had an inside day to up, then on Thursday inside day to up, and Friday inside day to up. But when we sold off on Friday, this is a very important area. What I would pay attention to is the highs and lows of the market profile, which is the candle itself for the day. It tells you where the high is, where the low. You can see it up there. And this is the time, this is where value spent high was. The value spent low is in the shadow. The point of control is where most volume is for the day on the NASDAQ 100. The time spent was lower. If I draw a high and a low, my midpoint is below the time spent on Friday, so the sentiment is lower. Here, if I draw the highs and lows and I get a Fibonacci to show everybody, if I grab the high, which was around the 21,529.75, 29.75, 29, let's just close enough, 29 quarter, and the low was around 21 192 quarter, 192 quarter. I just want to show you that the 50% was above, so the sentiment was high, and we came back down. Now the sentiment on Friday, just that way you can measure it, you can understand that the sentiment now is lower. Where do I have a virgin control point? If I back up in here, I'm going to put the markers on the virgin control points. This is a virgin control point that's never been retested. This is another virgin control point where most volume is, never been retested. These are two virgin control points, and the one on Friday and from Thursday and Wednesday being tested, and the Tuesday, but there was one on the retest here. If I look at the volume profile and I put this marker here, I want to show everybody that was tested in the overnight when we pushed up. We never retested it, but these were retested, and you have the highs from the market profile on Friday. That's a point of control. I usually mark these to tell you where the levels are on the S&P and NASDAQ in relationship to the weekly's highs and lows for the week in the profile in the last 5 days. So let's go now, take a look at the S&P, the micro S. And what I wanted to do the same thing here. We have a virgin control point here. You can see it. You mark it and leave it on the chart. You have another one here, virgin control point, that's never been tested. Once it is tested, it is no longer valid. This one, we got to check if it is retested. We'll look at it on the profile when we are doing a platform. When we switch it to the other side, and I'm going to do this one here. That's a virgin control point because this was retested. This was retested inside. This was retested in here. This is a little bit off. What I want to do is just mark it. You can zoom in, activate the chart, and just bring it in a little bit lower, so you are a little bit more accurate towards those levels. And when we bring it back to the charts from style, we go back from monkey bars or volume profile with the time spent to standard. It's going to show me the levels on the S&P 500. You can see that this is a virgin control point. From that area, we pushed up. We never retested. When we had inside day, we pushed up here on a gap up. We never retested it. This was from the Monday high, Tuesday lows, which was never retested in this high here. These were overlapping to touching, so we have to pay attention to this area if it is support or not. Coming back to these virgin control point, and that's your 50 SMA on the hourly. And you can do the same thing here to measure the distance on the weekly charts for the S&P 500. You can go get the measuring tool. The weekly highs is up here, the range to this low here on Sunday. So this is the range, and you can change the colors on the chart, edit the property, and go back to the 10 and change the color to baby blue, so you can you recognize the differences between the weekly extensions to the downside and the upside. And I have marked this area very important. After this consolidation for a week, we pushed up, we consolidated for another week, we had this gap on a grind higher. Let's see if the market's going to bring us back down or not in the S&P 500. Remember, the sectors in the S&P 500 are the energy sector was a little bit on the positive, discretionary was barely positive, financial were positive a little bit. Utilities were very well, but they don't represent part of the S&P 500. It's not a big part of the S&P. Material, consumer discretionary, technology, real estate, industrial, healthcare, and telecommunication. These are part of the S&P 500 11 sectors. You have to pay attention to them when you are trading them. Pick one or two stocks that you can follow on your charts whether you trade electronically traded funds or ETFs. That way you have an overall view of those sectors. Let's go take a look at gold, micro GC. And what I want to do in the micro GC, bring it into a daily chart. And what I wanted to do is show on the weekly after looking up. This was the prior year's high. When we broke out, we looked up to 250% retracement to the upside. We had these double top. We fell down to the 50 SMA. On the daily chart, I am trying to find if there is going to be supported around the 3100, 3150. I called the 3245 on Friday as well as Thursday. I said, watch in case gold finds support here and rallies back up in that downtrend channel, because I consider this area where it looked below and broke out as support to continue higher, because this was the 138 highs. So for me, that 138% usually is like 161 bouncing up and continuing higher back to the 50, from 50 back to 161. So this is how we trade gold. Or you can use GC or GLD. This is the micro gold in the futures. Let's go take a look at micro BT. And what I wanted to do here in the micro Bitcoin, a lot of people had called. You remember when we doubled up here, we fell back down. We found that support around the 75,000, 78,000. We rallied up. I consider this is a W. I consider this a shoulder. This is the inverted head of it with a double, dented like a W. You can see it here, formed a W. Think of it, somebody hit somebody on the head, and you got a V-shape inverted shoulder. Then we rallied up. I'm considering here there's going to be a little bit of consolidation. I'd like to come back to the around the 100,000 to around the 96,000 before continuing higher. I'd like to see that roundness to create like a Mickey Mouse or an inverted head and shoulders on the right before Bitcoin creates a push and breaks above that 110,000 and continue higher on the BTC or IBIT or GBTC, the ETFs. So let's go take a look at now one more. And what I wanted to do here, take a look at the small cap, which is the IWM. I'll show the IWM on the electronically traded funds. I'm going to move that Fibonacci out of the way. You remember, due to interest rates in the IEF, IEI, the ZN, which is the 10-year notes, or the ZB, which is the 30-year notes, we can see that the Russell's trying to come back out of the woodwork after falling sharply down here. It reversed up, but it found, a little bit of resistance around the 210. Let's call it the 210. It got up there, but it never really cleared it. So is there going to be consolidation coming back to the backside of this channel in the 18 SMA, where it catches up around the 203 or the 200 area before continuing higher? Because you can see this is the shoulder, this is the head of it. Is it going to form a shoulder, or are we going to get a continuation? So pay attention to the Russell in relationship to the electronically traded funds, IEF, IEI, or ZB or ZN in the bond or TLT. So that's the Russell, and I'm going to use the micro 2K, which is the micro 2K. And this is the micro Russell 2000. What I want to do is here show you how to do the measured move in this consolidation before the continuation in this area here. We can see that we had this island, we have a gap here. We consolidated, rallied up, consolidated. Then we had this breakout. There's a little island in here, which is these 5 consolidated days. And what I want to do, go to an intraday chart. What we can do is an intraday. We can do 10 days or 5 days to show the range. We can go back here to a 2-hour, 4-hour. We're going to do 2 hours just to show a little bit more of a consolidation in the Russell 2000. And you can see that the weekly high was here and the lows that was made in Sunday. So we can take the highs and lows, measure that distance. This is for the week. And the extensions to the downside, the minus 25, minus 50, minus 80, is coming back to this area. In this way, we had those 5, 6 days consolidation. I tried to look up, then eventually we had that professional gap. In case we come back to the backside of this area where the 20% is, and we find support and bounce off, that's okay. If we continue, we're watching for the 116 simple moving average and the 200 to catch up before continuing higher, or vice versa if we go in the opposite direction to the upside. Remember, there was the announcement on from Bloomberg downgrading U.S. markets, so we got to pay attention to the dollar, the interest rates, and the overall S&P 500, the 11 sectors in the S&P 500, or the Nasdaq tech sector, with the healthcare, which is XLV. And I want to do XLV. What I wanted to show in the XLV, there is some kind of support. I had called the healthcare sector on Wednesday and Thursday and said to everybody, maybe we have bottomed out. Look for opportunities in the healthcare sector, because after clearing this area here, we got a push up because it created like an H pattern with some W or an M, inverted M. This is an M, looked below and broke above that 129.50 area. That's a very important area to hold. If it doesn't, then you get out of the way. If not, you manage the trade coming back to the backside of this channel. If there's consolidation and a breakout, you look for the 61.8 and the 116 SMA and the 50 simple moving average. I hope this video was very helpful. If you have questions, once again, check us out. Get in contact with us. We're here to help. Take care. Over and out.